system is set for number go up. That's what debasement of currency does. When you have an over-indebted system, the collateral of the system, the assets, can't go down, because if not, you've got too much debt versus the assets, and that's what happened in 2008. So the whole system is based on that. The baby boomers are all going into retirement. You can't let their assets go down, because if not, they've got all the wealth. So therefore, consumption will collapse. The number can't go down. So as opposed to number go up, you could say the number can't go down. So the liquidity cycle is just an element of that. It's the actual mechanism by which it happens. If you're 30, you should just use any weakness to keep buying more number go up assets. For others, it then becomes a cycle to try to take some risk off the table, because it's a volatile space, particularly in crypto or technology investing. Both work well. But then you come to the question is, and most people get to this, is everyone thinks, yeah, I'm going to take money off. And then you're like, and where am I going to put it? Because as soon as I take it off, debasement's happening again. So you might put it in stable coins for a bit. Sure, definitely cash in lifestyle chips. Buy that house. Do that thing that you want.
Real Vision CEO Raoul Pal believes that the global liquidity cycle will drive up cryptocurrency prices. There are currently macroeconomic sources of liquidity everywhere, including upcoming monetary policy decisions by the U.S. Federal Reserve. Global liquidity increases during crypto macro summers. In 2020, things got crazy because of the pandemic, but 2016 and 2012 were good periods in terms of liquidity. Cryptocurrencies and technology have risen. Then comes autumn. Fall is often the time when the real fireworks happen. Liquidity continues to increase and eventually reaches its maximum in winter. This is when corrections occur, the bearish cycles of cryptocurrencies. So we have the two best parts of the cycle coming up. Paul is currently heavily invested in Solana, plus some small meme coins and other coins. The Solana Bitcoin cross chart and the Solana ETH cross chart look so compelling that the job here is to make as much money as possible by simply owning what you think will rise the most. We have 6 years to make as much money as possible because we don't understand what the world of tomorrow will look like. We have been given an opportunity. We can invest in technology. We can invest in cryptocurrencies. This is the largest macroeconomic trade of all time. This is the best performing asset class in history over the shortest period. So you're in for a treat. We don't want to hear anyone say that we've been excluded because everyone can contribute 10%. Everyone, if you live in the Philippines, Nigeria, or New York, you can invest 10% of your salary. It is a global, homogeneous, democratic, and egalitarian asset class. It's the hottest asset class of all time. So it's pretty simple. Just buy it and hold it. According to Raoul Pal, Solana is the coin to gain huge ROI in 2024. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana.
If we apply that thesis that there is no diversification, everything's correlated, you want to own the best risk-reward asset. If you go too far out the risk curve, you're early stage, you don't have network adoption effects yet. So I had made a lot of money in the last cycle by switching from Bitcoin into ETH. I had switched because I saw network effects of ETH were growing fast. It was NFTs that really ramped it up, plus DeFi. And so an earlier token with less adoption, that's gaining adoption, goes up faster in price. That's just how it works. So I thought I was going to be all ETH this cycle. I had a bit of Solana, and I'd observed a couple of things. This space is about narratives first, primarily about the narrative. I had been then watching the chart of the Solana ETH cross in the same way I do the NASDAQ Bitcoin charts. And it was basing, and I'm like, you know, this could break out. And I've got a thesis. This is the retail chain.
Raoul Pal mentioned Solana as one of the top altcoins he is most bullish on. Riding the wave of the vast Solana ecosystem, Paul believes that the 2024-2025 bull cycle could usher in a new era for most altcoins, especially Solana. As a result, analysts have selected some of the best altcoins that can have a great future, such as Solana. Raoul Pal referred to Solana as one of the best altcoins to buy for profit ahead of the next bullish dispensation. Solana has risen to the upper echelon of the cryptocurrency market and is currently ranked 5th among the top cryptocurrencies by market capitalization. Solana traded at a very low price of 0.5 on May 11, 2020, before rising to a stimulating price of $260 18 months later. Solana has become a widely used network between projects, developers, and users. Its foray into the NFT, meme coin, and metaverse market has further positioned it as an altcoin to watch in 2024-2025. Although Solana's price and Solana's trading volume may have decreased over the past week, analysts believe there is no cause for alarm, as this is a widespread situation. With the continued development of the ecosystem, Solana can light up the next bullish cycle and reach $200. You get between 10 and 50 times each spin by purchasing one of the larger coins. The hardest part is that people get stuck in a story. There are people trapped in Cardano, people trapped in XRP, people trapped in things of the past. This does not mean that they are bad projects, but if your game is to make the most money, then you need to let go of all your loyalties from the previous cycle. All the things you were taught to believe, like Ethereum, are the only things you had to believe in the last cycle. And now you have to believe that Solana is the fastest, the cheapest, the best, and that this narrative will be broken in the next cycle. And you have to accept that it's okay. Paul is optimistic about the impact of an Ethereum exchange-traded fund, ETF, on the cryptocurrency world. He is optimistic that the demand for an Ethereum ETF could lead to a sharp rise in prices. The presence of all the above could push the price of Ethereum into what he describes as a square banana zone. In particular, if approved, the possibility of massive demand for Ethereum ETFs could significantly increase buying pressure on Ethereum. Naturally, this will lead to higher prices. Furthermore, given the staking dynamics with Ethereum, around 30% of Ethereum is effectively withdrawn from the market. This percentage is put into play to validate your network operations as a proof of stake (POS) protocol. This reduction in circulating supply could amplify the effects of increased demand on prices. Paul also highlights the network's token burning mechanism. Ethereum's mechanism of burning a portion of transaction fees guarantees a reduction in the supply of Ethereum. That is, as network activity increases, the consumption rate increases, thus intensifying supply compression. Whether Ethereum continues to outperform or not, it's not, but let's say it is. There is a new application that once again increases the use case for Ethereum. Perhaps this is the characteristic of real-world assets. Anyway, aside from everything increasing from Solana's initial stage, it should increase more. This is a standard risk cycle. The risk is now limited to Solana. There is a lot more risk when you go for tokens at an early stage because you simply don't know if they will be adopted.